Here are the ABCs of NFTs and other tax issues for this coming tax season. This is the Issues Watch podcast. Welcome to the NJCPA Issues Watch podcast. I'm your host, Stein Smith, and I'll be your host for all of the technology topics and issues talking about on the NJCPA Issues Watch podcast. So awesome news. Our episode also qualifies for nano CPE credits, a cool thing, I think. And so if you are interested in more, hit pause right now, head over to njcpa.org/NANO to find out how that whole process works. All right, so now into our content. A quick background about me. I'm your host, Stein Smith. I'm on the faculty at Lincoln College. I'm an incoming member of the NJCPA Board of Trustees, and I do a whole bunch of work in the blockchain, crypto asset, emerging tech space. And I am the past chair of the NJCPA ETIG. I'll be talking more on those in a couple minutes. But all of that out of the way, what are we actually talking about here today on this first ever tech-focused episode hosted by me on the Issues Watch podcast? Okay, so the ABCs of NFT taxation. Obviously, taxes are a ultra-hot topic right now in January. It's always a hot topic, right? And so NFTs, the non-fungible tokens, right? So the first thing to really understand here is, one, what are NFTs? And two, how they're different, both as opposed to cryptocurrencies, and how they are different as per an income tax point of view too. So off the top, NFTs are non-fungible tokens, right? So they aren't equal on a one-to-one basis, right? Because most cryptocurrencies, be it Bitcoin, Ether, Dogecoin, all the rest, all of those are fungible, meaning one Bitcoin equals one Bitcoin. Whereas NFTs are all individual, different assets. And so all of that raises a whole host of issues in terms of auditing, valuation, taxation, compliance, all the rest. And so really trying to, one, explain to our colleagues and also to our clients who could have possibly gotten into NFTs on accident, how they're different versus Bitcoin is a key place to actually start, right? And so adding on to that, the whole tax outline, the whole tax framework for how different cryptocurrencies are treated has not, I think, changed and kept pace with how the overall space has evolved going forward, right? That even though out of the IRS, we've had plenty of commentary. We had the FAQs in 2019, all of which have been updated and tweaked. So it's also important to have an eye on those. That the current guidance really treats every crypto asset and every transaction happening in this space as a taxable event, right? That at the bare bones, every time that there's a purchase, that there's a sale, there's a trade, there's a swap, any transaction involving any crypto assets, there is at the baseline going to be a tax compliance obligation and possibly a tax payment obligation also. So in terms of any sort of tax updates in there, I'll be honing in on those during the whole year. But off the top, the best piece of advice that I always have for anybody out there is to try to be as transparent and as upfront as you possibly can, right? To always have documentation, to always be proactive, and to ask your external clients. Ask them if they are involved in any cryptocurrencies, any NFTs, either on purpose or on accident via a gift or other type of online transaction, right? Because it's awfully easy to be involved in NFTs and other crypto right now. And it's and also by actually being involved in NFTs, just to add some extra hot sauce in here, right? In order to buy almost all NFTs, not all of them, but almost all, in order to actually buy the payment to buy them has to take place in Ether. So in order to even own a NFT, the individual taxpayer or the institution has to first buy Ether and then trade that Ether for NFTs, right? So off the top, there's automatically tax compliance and possibly a tax payment obligation in almost every transaction involving a NFT. Okay, so FAQs about NFTs. As if this whole conversation wasn't complicated already, just to add in some extra nuance here. NFTs can actually create a whole range of income tax obligations depending on the individual taxpayer's AGI, on the application of these NFTs, and on how these NFTs are actually treated. And so all of that, it's easy to overlook that fact, right? That NFTs, okay, NFTs are crypto assets, and so every asset in this class is treated as property and almost always has an income tax obligation. Great. But depending on the type of taxpayer and on how they are connected to the NFT, there could be different tax obligations. For instance, if you have an artist, a content creator, or a other individual or institution who is minting their own NFTs, that could be treated as ordinary income if that creation, minting of the NFTs are a part of their ongoing ordinary business activities, right? But if you are dealing with a taxpayer who bought a NFT or who was gifted a NFT, that is normally treated, or the income taxes are treated differently, depending on the holding period of that individual or institutional buyer. For instance, if I bought a NFT of this podcast episode, might do it, and then held it for over 12 months, any economic gains, any income taxes owed on any gain in price during that over 12-month period is treated as a cap gain. Under 12 months, ordinary income. But to add in some extra nuance in here, to really hone in on the issues, depending on the AGI of the individual taxpayer in question and other items that are on their individualized returns, higher net worth or higher earning taxpayers could actually owe the higher collectible tax rate on NFTs. So it really, really pays that if you're talking about NFTs to any external clients or internal colleagues, or you are planning on doing so, it is incredibly important to, one, have a good baseline definition to actually have your clients understand what NFTs are and how they could possibly have some. And then two, to help them understand and to help you answer what other tax obligations could be incurred as a result of them being involved in NFTs. And to just wrap up here, I always push that if you are a member of the NJCPA, I hope you all are, earning some of these awesome educational credits here today, that you always have a quick look at and hopefully join the Emerging Technologies Interest Group. It's a great group. There's a ton of content out there on a every month basis. There are articles, events, conferences, panels, podcast episodes, always hot and fresh every single month. And with that, thank you for joining us. We are going to be back every month with hot, fresh, and new tech episodes of the NJCPA Issues Watch podcast. And all of our episodes are posted on njcpa.org/podcast. Thanks, and have an awesome day.